It looks like Alphabet is going to spend around $85 billion in total capex this year. Weiss, you own this name. You're in Alphabet. We often also talk about maybe some of the smaller assets, but perhaps very valuable in the social media world, like YouTube. I mean, are you getting YouTube for free with an Alphabet valuation?
Always difficult to say because you don't know where analysts and where investors are placing the value. So it could be getting part of Waymo for free. Who knows?
Yeah, sure.
But the point is, I think, is that what's driving this is that. I think some investors think they've discovered, to your point, the undervalued Mag 7. And it was, and they're buying momentum, which Joe, based his strategy on. So take a look at where the stock bottomed in the recent moves in this. And it's not only this, it's like United Healthcare. I think it's more defining for the market than it is for Alphabet. So to me, that's just the trend in the market. The market just goes higher. Earnings don't mean much. I mean, they've executed well, and the controversy over whether they have AI or not seems to have subsided at all, and now they're executing. And by the way, the lack of AI doesn't impact how Apple's traded. So these are purely momentum trades in a momentum market. Now, I actually think that, relatively speaking, Alphabet is cheap. It is inexpensive. It's not cheap, relatively inexpensive. So that's why I'm there. If we're a normal market, I still say, you know what, deserves a slight premium to the market. And I can see it going higher, but some of the others, I think, like in Apple, are way overpriced for their growth.
If you look at that 3-month chart, I mean, look at that momentum. It just follows sort of, even starting in May, just straight up. And Brent, I know you're nodding your head there. I want to get you in on the conversation.
Yeah, I mean, I think this is more than just momentum with Google specifically. If you go into the Apple App Store, Gemini is the #1 downloaded app, free app, above ChatGPT. And so I think where a year ago, at least I was, and a lot of investors were like, well, ChatGPT has taken all of their OpenAI, has taken all the oxygen out of the air. Well, now, Gemini is really finding its point and finding its place. And you think if Google has access to all of our YouTube, all of our search, and all of our Gmail. And if you put that together and you put it with a partnership inside of Apple, and you have this secure data set within your own information, really Google via Gemini could be pretty slick. And so I think that, people are starting to realize that. And last week, the CEO of DeepMind, I think his name is Demis Hassabis, was speaking at the All In Summit. And, he really walked through all of the big metrics that Gemini is succeeding in. So I think people are starting to realize that, Gemini is going to be a real contributor. And I think, if anything, the private market valuation of OpenAI is the one that's overvalued. And I think Gemini via Alphabet will continue to gain a ton of traction.
Yeah, go ahead.
Yeah, I just want to add one point. Bryn points out Gmail, and Gmail just has only started recently to increase pricing. And when you're going through the antitrust litigation issues, you're not going to do that. So think of it more like Netflix, where they use their power, and about 40% of email users around the world use Gmail. Just think of what they can do to increase pricing, the levers they can use, and that'll drive more profitability at Alphabet, which, again, they couldn't do while they're under antitrust scrutiny. So I think that's another level.
The antitrust ruling, look, I think the visibility that Alphabet has been afforded since the antitrust ruling is, Bryn's talking about positive fundamentals. Yes, we understand that, the effect of Gemini, the broad diversified business model that they have, YouTube, but you don't get to see optically those strong fundamentals if you don't get the antitrust ruling.
Sure.
That is a massive clearing event, and that clearing event is the reason behind, as Steve talks about this being a momentum market, that's what it is. And when you get that lifting of sentiment, that's when you get the price discovery, and you see all of these quantitative funds compiling into the market and pushing a particular equity name like Alphabet in one direction.
So
you had nice moves before that, though, in fairness. I mean, the stock bottomed 160, traded 200.
Yeah, stock's up 31% year to date, right? 18% of that move has been since the clearing event, since early September.
You can see that move in the chart. Go ahead, Shannon.
And I guess my concern or my consideration for where we are today is that we see yet a fourth company reach that $3 trillion market cap. And we talk about this momentum,
so NVIDIA, Microsoft, Apple, and Alphabet here.
So, at some point, that is potentially a concern for those of us, including myself, who are looking for this rotation, in the market, down mid-cap, small-cap, outside of the U.S., when you have such large companies that are essentially, multifaceted conglomerates that make up such a big part of the market. And so, you wonder how much that this will perhaps hinder as more and more assets are concentrated in these very large companies that are doing quite well from an earnings perspective. How much will that hinder this potential rotation in search for value? And I think the momentum factor only compounds that.
Got it. I do want to go back to Bryn's point, and I agree with what you're saying. But let's talk about the other big companies. Bryn, you were talking about OpenAI, DeepSeek, Microsoft. Microsoft's another big name. It's still up. It is the worst big tech name, though, over the last 3 months. And there's an interesting report from The Information saying that OpenAI is set to gain $50 billion from cutting revenue share with Microsoft. So the difference between these two things could be $50 billion, again, according to The Information. I mean, what do you make of that report and the opportunity that could be available for OpenAI?
Well, I mean, OpenAI is making lots of promises that need to be funded by private investors since they have revenues, but they're losing just billions of dollars on top of that. So, I mean, I think that would, let's take it at face value. Obviously, Microsoft and OpenAI signed an agreement, which we don't really know the details of that agreement, except that Microsoft is going to, let them pass, we'll say, to go public. And I think over time, if those revenues continue to build, it would make sense that Microsoft wouldn't get that current amount they have today. But I still think that Microsoft, instead of paying $500 billion for secondary shares in OpenAI, I think Microsoft, with tons of free cash flow, multiple levers, is a better way to play it than buying OpenAI on a secondary market at $500 billion.
Got it. Joe, what do you make of this when you've owned Microsoft in the Joe T? We're closer to $4 trillion than $3 trillion for Microsoft.
I think Bryn is spot on. This is a way to get in the public markets the exposure to OpenAI. There has been a little bit of a deceleration in the rate of appreciation for the stock year to date. Let's remember at the beginning of the year, Microsoft is one of the clear winners in the Mag 7. It was the name that you wanted to own. It had the strength in cloud. We heard last week from Oracle. Are we witnessing a moment where maybe Oracle is capturing some of that cloud market share from Microsoft and others? I think we'll learn about that in coming quarters, but I'm not particularly troubled about what appears to be, over the last month or so, a relative underperformance from Microsoft to its peers like an Apple, like a Tesla, like an Alphabet. I just think that's more of an internal rotation, position squaring more than anything else. I think collectively, when you look at the universe of Mag 7, there is going to be a ceiling at some point on these earnings. There is. And there's going to be a moment where the market is going to correct as a consequence of that ceiling. But I just don't think it's in front of us here in 2025. I think it's probably when the calendar turns into 26.
Weiss, Microsoft?
Yeah, look, I own it. It's a permanent compounder. It goes through periods of time where it lags or where it's down, and you just have to fight through them. You've got Windows 11 coming out. You'll see a lot of upgrades. You'll see increased subscription pricing. In terms of OpenAI cutting $50 billion, I'm not sure that's correct. I'm sure, to me, what it means is they're not going to give as much revenue to them, but you still see a percentage of revenue, but you'll still see the revenue grow. Okay. So in the meantime, Microsoft has also hedged their bets, not only relying on OpenAI, and we're seeing OpenAI has major funding concerns going forward. So I still like Microsoft. I see no reason to get rid of it.
Okay.